Okay, so this question is from May June 2015, paper number 21, and this question is on ratios. And let's start. So it says John provided the following information for the year ended 31st March 2015. So we have the revenue given, the opening stock given 65,000, the closing stock 35,000, we have the expenses, we have the owner's capital 300,000, long-term loan we have 150,000, and then we have a markup of 20%. It says calculate for the year the cost of goods sold. Now the cost of goods sold is basically representing the cost of those goods that have been sold and from which we have earned revenue. So it's representing the cost of all those goods that we sell from which we earn the revenue. So it's representing the cost price of the goods, in other words. So now let's see. So first of all, in this question we have the markup that is given of 20%. Now markup is basically a gross profit percentage that is applied on the cost of goods sold. So the formula is gross profit divided by cost of sales into 100, right? So the markup is 20%. Now the thing is that we have to convert the markup into margin. We have to convert the markup into margin. Now what is margin? Just like markup is a profit percentage on cost, similarly margin is a profit percentage on the revenue. It is a gross profit percentage that has been applied on the revenue, that is the sales. Okay, so since in the question the revenue is given, right, and we have the markup given, so we can't apply the markup percentage on the revenue. We can only apply the markup percentage on the cost of sales. Hence what we have to do is that we have to convert the markup percentage into the margin percentage, okay, which is, like I said, convert the markup into margin. So how we'll do that, let's see. So markup is basically a percentage that is applied, a gross profit percentage that is applied on the cost. So let's express the 20% into the fraction, so it will be 20 upon 100. So if the gross profit is 20 and the cost of sales is 100, which means that the revenue, that is the sales, will be 100 plus 20, that is 120. Because if you're earning a gross profit of 20 on a cost that is of 100, which means that you must have sold it for 120. Okay, so now let's apply this into the margin formula. The margin is gross profit divided by sales into 100. So right now it's not necessary that you have to convert it into the percentage. You can also just take the gross profit upon sales ratio. So what we'll do is that the gross profit will be the same, that is 20. Okay, so 20 divided by the sales that we calculated, which was 120. So 20 divided by 120. Now this will give you the margin ratio, right? It is giving you the margin ratio, that is how much gross profit was earned to sales, that is 20 is to 120. So now what you will do is that you will apply this ratio and multiply this ratio with the revenue. So you calculate the gross profit, which is 20 divided by 120, which is giving you the margin ratio, and you will multiply it by the revenue which you have earned, that is 900,000. So if you do that, you will get 20 divided by 120 into 900,000 would give you 150,000 as your gross profit. All right, so the gross profit is basically 150,000. So if the gross profit is 150,000 and the sales is 900,000, so you can effectively calculate the cost of sales. So the cost of sales is equals to revenue minus the gross profit, which means 900,000 minus 150,000. So you get a cost of sales of how much? You get the cost of sales of 750,000 effectively. Okay, so this is your answer to part A. So basically you need to know how to convert the markup to margin. Okay, so part 2 says to calculate the profit for the year. Now the profit for the year is the same as net profit. In the new terminology, the net profit is known as profit for the year. Okay, so you calculate net profit by adding the incomes to the gross profit, that is all the additional incomes that you have earned, minus the expenses, that is the operating expenses. Okay, so the gross profit was calculated in we calculated gross profit in part A, that was 150,000, right? So you will write this down, 150,000 plus the incomes, there are no incomes in the question, minus the expenses. The expenses are calculated as 105,000 that are given the data of the question. So the answer would be 45,000 is your net profit, that is profit for the year. So in this video, we learned how to convert the markup to margin and also how do we calculate the cost of sales if they have given the revenue and instead of margin they have given the markup. So in my next video, I will be solving part B of the question, which says how to calculate the profit margins, the rate of inventory turnover and the capital employed, and also I will tell you how do we comment on the performances of the business. So keep watching and see you next time.